Hello and welcome to a very special historical update.
Dow tops 40,000.
Wow, the team, I'm Victor.
I'm Max.
Josh
This
is
is
behind the
Josh.
scenes and let's roll on. Our underlying thesis today, we're going to highlight one because this is so important and so apropos for now. We make observations, not predictions, and here's the observation.
The Dow closed at a record high 40,000. The Dow on Friday was at 40,003.59, up 6% for the year. The S&P is at 5,300, up 11%, and the Nasdaq's is at 16,000, up 11% as well.
Wow. Let's do a little quick Dow Jones Industrial Average history.
So you can hit all your friends at trivia about these facts.
There you go.
All right. The Dow Jones Industrial Average, started by Charles Dow and Edward Jones, was established. The DJIA, Dow Jones Industrial Average, in 1896 with 12 companies.
And the Dow is price weighed, which means the value is calculated by adding up the 30 stocks, then dividing them by the Dow divisor, which they adjust for splits and mergers and etc. And higher priced stocks impact the Dow more than lower priced stocks.
The Dow Jones Industrial Average increased to 20 stocks in 1916.
Then in 1928, they increased it to the current 30 stocks.
And then on March 15th, 1933, the largest one-day gain, up 8.26 points, or 15.3%, which would equal 6,136 points today.
Wow. 8 points made up 15%.
Yeah.
Jeez Louise. Then October 19, 1987, I was there. The largest one-day drop. The average fell 22.5%, or 508 points. That would be equal to over 9,000 points today.
Wow.
Woo. I turned white that day, and I mean really white.
All right, on 2017, January 25th, the Dow crossed over 20,000. I was there for that.
There you go. 3 years later, Dow, November 2020, crossed 30,000, and
We were both there.
yep.
And then on 2024, May 17th, the Dow crossed over 40,000, and we were all there again for that.
All right. So, Dow Jones Industrial Average, you see the 20-day, the 50-day, the 200-day. The trend is up. That's the Dow. Let's see if the S&P is confirming.
The S&P is confirming the trend is up.
And NASDAQ is confirming. All of them are moving together. So why is this happening? We're going to show you now why we think this is the perfect storm for a bull market. Number one,
The Dow Jones crosses over 40,000, signaling an all-time high.
Number two, the Fed has signaled the probable peak in this interest rate cycle. Historically, bull markets begin after the Fed interest rate cycles end.
Number three, from 1928 to 2016, during election years, average annual return for the S&P 500 was 11.28%.
Number four, historically, there have been 24 elections since the S&P 500 index began. 20 of the 24, or 83%, proved a positive performance.
Lucky 83.
Yeah.
All right, S&P 500 index made an all-time high of 5,000 on February 2nd, 2024, and keeps extending its rally. Since 1970, the S&P 500 index has been positive over the next 12 months, 83% of the time after making an all-time high.
We're seeing at 83%, so we're well over 80 next. And while past performance is no guarantee of future performance, history is the only indicator that is purely factual in nature. No opinions, no woulda, shoulda, coulda, just the facts.
Bottom line, history is lining up to indicate the possible beginning of a new bull market. That doesn't mean there won't be corrections or downswings. It's never in a straight line up or down.
So remember, 2024, the outlook is quite favorable. We have everything lining up. You got 80% plus odds. We're going up. We will have some pullbacks and corrections. That's normal. But we have now made another record.
And there will be volatility going forward, especially in this election year.
Absolutely.
So, total real rate return indices.
Wait a minute. What's the real rate of return?
Vic, we'll go into it.
Real rate of return means the real return after inflation. So all of these numbers are after inflation. So when you see a number, they've already taken inflation out of there. So stocks, the dollar turned into?
2.1 million.
Wow.
Bonds, the dollar turned into?
$1,463.
Oh, that's crummy.
Yeah.
T-bills, what did dollar turn into?
$237. T-bills are like 1-year CDs.
And gold turned into $4.18.
What if I just kept it safe under my mattress?
You got 4 cents, Vic. You lost money. You lost your 96 cents.
Oh man, that was lumpy. So put it all together, one more, and you're going to see those are the real rates of return. Real adjusted for inflation. After inflation is taken out, the stocks were still up 6.8%, bonds 3.3%, bills 2.5%, gold about 0.6, and the dollar lost money.
All right, the pattern has repeated itself since 1926. We've shown this on every presentation. Bear markets on average are not even a year, 11 months, and bull markets, Vic,
average almost 6.5 years. Now, whether we're going 6.5 years or not, or so, we can't tell you now. But do we have a very strong future coming the next 1 or 2 years? Absolutely. Yes.
All right, so tie it all together. Those that fail to learn from history are doomed to repeat it. Those that learn from history can prosper.
And we add the historical content. So remember, why does history repeat itself? Because times change, but people do not. All right, so thanks for joining us today.
Thanks for joining us today.
And remember,
we're here
looking out for you.